Monday, 6/17/2019, and we are live here, Tackle Trading's YouTube channel, and our daily halftime report where we break down the markets one step at a time, the market skyline, the indexes, the news, the reports. And in the summertime, Matt, it is a theta feeling summertime day here. Markets aren't really doing much. First off, how you doing today, Matty?
Doing good. Excited for the week in the market, but it's not going to be exciting the next 2 days, most likely. So it's going to be an interesting next couple of days.
Cody, I saw a nice picture from you from over the weekend with your ohana out there in Hawaii. You're making friends out there, I'm guessing. Very social. Were you guys out barbecuing or something?
I'm trying to think what picture put on because I didn't do it, so it must have been my wife that put it. It
must have been, yeah.
We went out to the beach yesterday. Actually, I got a little sun on me.
Yeah.
And yeah, we were out there for probably 6 or 7 hours just hanging out on the beach.
You know, one of the advantages of being a trader in Hawaii, Matt, is that during times like this when the markets aren't doing much, you can hit the beach and actually get outside and enjoy the weather. I know you went golfing over the weekend. Also, the U.S. Open. What'd you think of that? I know you watched every single moment of it. So,
well, it's a tradition for me in the Justice household is to watch the U.S. Open on Father's Day. So happy Father's Day to all the fathers out there yesterday. But it was fascinating. It's absolutely fascinating to watch that at Pebble Beach. And congratulations. What was the guy's name who won it? It was, I can't believe I'm forgetting his name off the top of my head.
I watched the end of it too. The fact that I can't remember. Woodland. And he has a great story. I mean, his story about his kids and what happened with those twins, I mean, it was very, very heartwarming. There's no doubt about it. You were rooting for him, right?
Oh, it was hard not to, but yeah. I'd like Koepka. I mean, Koepka is just so good, and it's hard not to cheer on greatness like Koepka going for 3 in a row. But you know, I'm a golf geek, no doubt about that. And it was enjoyable to watch. It was a great tournament. USGA did an absolutely fantastic job this year.
Yeah, they did. And one of my favorite announcers, Joe Buck, he was calling day 4 there on Sunday, so I enjoyed that quite a bit.
No business calling golf, and neither does Fox.
He can call whatever he wants. I don't really care.
Else, just not golf.
What's more boring, the market today, or are you guys talking about golf?
S&P 500
market.
It is a doji up here at the top. 2,900, guys. We're stalling right here as we're heading towards the Fed, and it's not really that hard to really wrap our head around it. People want to know what's going to happen on Wednesday, and until Wednesday comes and goes, it's hard to expect a big move up or down before then. You never know with the market, obviously, Matt. But now this is about 4 or 5 days in a row since last Monday when we gapped out into this level. We have not been able to break it and run it, but we are holding up here. What's your read on the price action?
Well, it's playing defense, and this happens a lot of times when you have some major news coming later on this week, and we have, you know, it's not just the U.S. Central Bank this week, guys. It's the U.S. Central Bank on Wednesday, but you also have the Bank of Japan on Wednesday. You also have the Bank of London on Thursday morning as well. So when you're looking at these central banks, it's going to be important to understand that Wednesday and Thursday is going to be very important. Now, in my estimation, this is what I feel is going to happen. Now, obviously, we want to wait and see, but this is kind of what I think. I think Jay Powell is going to continue to have the interest rate at 2.5%. I don't think he's going to lower the interest rate coming into this June meeting. But I do think he's going to set up the stage for a cut later on in the summer, whether we're talking about a potential late July cut or whether we're talking about a type of September type cut. But I do think they're going to lay out the language to remove the patience from the language. And when they remove that patience from the language, I do think that's the indication that the Fed's going to either raise in late July or September of this year. So I don't think they're going to cut, but I do think it's an important economic report coming out of the Fed this Wednesday, just simply because it's going to lay the groundwork for a cut in the back half of 2019.
You know, the 10-year note just the last 5 days alone has gone down 6 basis points. I was talking to my wife this morning, and these are the conversations you're going to hear. Honey, maybe we should look at refinancing later in the year. You know, as interest rates come down through the back half of this year, Matt, it's going to create new dynamics in the interest market. There's no doubt about it. Bond yields are up. The Fed is not expected to cut this week, like you've talked about, but that could be a radical thing that could come out and happen. I mean, if the Fed cut on Wednesday, I mean, what would the expectation be?
They're not cutting on Wednesday. There's no, in my estimation, there is no logic behind a cut on Wednesday. The Fed has not indicated that they're going to cut on Wednesday. I don't think they're going to cut on Wednesday. And no, I would not like to refinance my house if they cut a 0.25 percentage point.
No, I'm thinking more like 6 months from now. I mean, you've had interest moving for quite some time now. So I look at the monthly bond charts.
Interests are going to be lowering over the next 2 years, Tim.
You think so?
Yeah, I do. The Fed is not going to cut one time and then just say, "Oh, yeah, we're good now." You're going to see this across the board this week out of the Bank of Japan and out of the Bank of London and out of the United States Central Bank. They're going to all indicate the slowing growth around the world. They're all going to indicate the trade has had an impact on economics, and they're going to all indicate lowering interest rates down the road. And to me, when was the last time the Fed cut one time without cutting another time?
Yeah, I'm thinking at least two.
It's been 3 decades.
Mm-hmm.
It's been 3 decades. The Fed does not do that. The Fed doesn't say, "Oh, we're just going to cut once or twice." The Fed starts normalization of policy, and that takes about 2 years. And then when they start downgrading policy from a monetary perspective, that takes 18 months to 2 years. And so when you're looking back to 07, 08, I mean, that took a good 12 months for them to cut from the 5.5% they did to zero. And when you're looking at the .com, it took 2.5 years for them to cut from 6.5% to 1%. So anybody who says, oh, the Fed's just going to cut one time and that's going to cure the problem, we don't even know what the problem is yet.
Mm-hmm. Yeah, no, 100% true. There's many stocks we're going to be looking at as we go through this, but I want to get Mart's take right here as we're leading the show here with the Fed and the G20 this week. I want to talk about as well. Mart, come on in here for a minute, first of all. And how are you doing on a Monday morning? Yeah. Well, that's kind of the market right now, Mark. We're only up 3 points on the S&P, 0.1%.
I'm paralyzed like many other market participants until that Wednesday meeting.
Mm-hmm.
I just cut and paste what Matt said. That's what I think too. But, I still want confirmation on Wednesday before I make any major things. So I'm in a holding pattern on my own trading until Wednesday, which I don't like, because this affects not only equities, this affects gold. This affects, the dollar. It affects a lot of the areas of the market that I'm focused on.
Mm-hmm.
And so, I really would like to increase my gold position, but I'm going to wait till Wednesday. So,
but I do know that you have quite a few long-term investments where you do dividends and cover calls and things like that. Do you go delta neutral into the event, or do you just kind of wait and sit?
My long-term portfolio is managed independent of my trading portfolio. So, that has its own lifeline, but I'm referring to trading and swinging and even position trading, things that anything that I'm willing to hold from a day to 6 months, basically.
Yeah, I agree with Mark 100%. I don't think you have to worry about delta weighting a long-term value or growth-based portfolio based on the Fed.
Yeah, I would agree with that as well.
I mean, most of the time, guys, the Fed comes in and everybody gets hyped up and everybody gets excited, but then the price action kind of underwhelms.
Correct. In fact, we've tracked that in the halftime report in the past, Matt. We went back and looked at every Fed meeting over the last 10 years, even during this entire QE process and everything that's been happening from a monetary perspective. And the meetings themselves tend to overprice the risk of the volatility. That's the nature of what they do. It used to be maybe 15 years ago, we'd get crazy Fed meeting events, but the market is fairly efficient. The only radical thing, in my opinion, that could happen on Wednesday is if they did come out and cut. I think it's a very low probability. I don't think it's going to happen, but that would be the one kind of ace in the hole that could create some volatility on Wednesday. But I don't know. We'll see it. We'll see when it happens.
Again, I think the most likely scenario is they're just going to remove the patience language to set up a rate cut in July or September.
Mm-hmm.
Yeah, the only thing I'm concerned with really is that they don't remove the patient language, which they likely will. That's where I would think. That's where the market thinks. But if they didn't, for whatever, if Powell was just like, screw you, Trump, I'm going to do what I want, and him and the board says, no, we're not quite there yet, to signal that, which I don't believe, because look at everything they said last week. I mean, they've been really good at telegraphing things. Not last week, but the week before, when the market rallied, everybody came out with a synchronized speech. So I think it's pretty easy. They'll remove the patient language. The market will rejoice, just to have Trump and China kill it 2 weeks later.
Sure.
He's not wrong.
No, probably not. So we're going to stock pick. We're going to look at individual components. Start with Facebook, Matt. You know, Bitcoin over the weekend, top 9,000, and there's so much anticipation right now on Facebook, and I'm sure that we all have opinions about this. There's no doubt about it. Facebook is running on the anticipation that their cryptocurrency profits are going to help propel them. Analysts are reaffirming upside price targets. It did gap out, completely took out the entire pattern here, Matt. Give me a read on this chart, if you would.
Well, like I said last week, apparently all you have to do to, change a bearish downtrend is to come out with a white paper on crypto. I mean, literally, that's all it takes these days. And, it's going to be interesting to see how Facebook plays a role in it. But I'm very dubious of this with Facebook.
Mm-hmm. Yeah, obviously a gap out when now you're above moving averages, you're gapping into a resistance zone here. Is probably not tradable in any regard in the way that I personally trade. I wouldn't approach that with any kind of entry points. It does throw it off my bearish watch list. I literally just deleted it and moved it out of the watch list because there's nothing here bearish now either, Matt. It breaks that chart pattern when you have that gapping news, don't you think?
No, you're looking for a retracement to buy.
Yeah, probably.
I mean, you're not going to chase the dragon here. I mean, Facebook's up from what about 162 to 186 in the last 2.5 weeks. I mean, it broke through its patterns, it broke through its trend. You got to move Facebook back into a neutrality, and then once you move it back into neutrality, you look for a retracement here on Facebook. But the Facebook news really, I'm not that interested in Facebook, but it does lead me to have a little bit more confidence in Bitcoin, in this movement we're seeing in Bitcoin, Tim. And let me ask you, what is the difference to you when looking at Bitcoin today versus when we were doing this very similar situation in 2017, Tim?
Well,
I mean, literally very similar, parabolic, euphoric, very volatile. But is this different for you?
You don't have the madness of the public, in my opinion. This is more institutional volume. From what I know, and by the way, I was saying this before in pre-production, anybody who tells me they know 100% why Bitcoin is moving, I usually shake my head and disregard that person's opinion because I don't think anybody really does. But what I have studied and what I've looked at is a lot of the exchange volume is institutional and not consumer-based anymore. You have less of the spoofing kind of action that was developing there. I still don't trust it 100%. It's not the same kind of market as the New York Stock Exchange, obviously. But you've had the futures market around Bitcoin now for 1.5 years, Matt. It's been 18 months.
Unlike last time in 2017 where you had the Facebook warriors, right?
Mm-hmm.
They were coming out and really kind of driving it. Now it's Facebook. Now it's Google. Now it's the banks. Now it's Goldman Sachs. Now it's JP Morgan. Now it's Jamie Dimon. Now it's the central bank. Now and you said it, your very, very first thing you said, it's institution. And when you have institutions starting to brace this thing could run. And Tim, you said, Matt, I think I might have put the top into Bitcoin. I said, well, what'd you do? He's like, I bought it. I said, yeah.
I did. I stuck
a breakout. You bought the breakout, didn't you?
Yes, I did. I bought the breakout on the pivot over the weekend. And by the way, it's a 24-hour a day market and you can trade it on Sundays and all that kind of stuff. So while I was hanging around waiting for the US Open to get up and running, I was watching the Bitcoin charts in the morning, and kind of watching these markets and going through my Ethereum charts and my Ripple charts. I can tell you, I can just feel it in the halftime report, the fact that we're coming to it every day, Matt, instead of ignoring it there like we did for a long time when it was down in the dumps. There's something going on in this market right now and it draws your attention. Mark, do you think I put the top in here by buying this breakout?
Are you still holding it?
Yeah, it's a trade. Yep.
Where'd you get in?
I got in at 9,200 even.
Yeah, I don't like your chances.
I like the fact that it is playing defense at 92, though. I mean, you've had multiple times since the futures market opened up yesterday where it came down to 92, came down to 92, came down to 92. And even in the last hour of the trading days, you tried to break out, it came right back down, hit that 92 level, and now it's kind of slowing its momentum. I like it. I think it's going to be good.
I got a stop loss down here, and I'm targeting about 10K. It's just a trade. We'll see. I mean, position size.
Where you're putting stop loss under 9,000?
8,900. Yeah.
Figured as much.
Yeah, about a 2-to-1 reward to risk. The thing about trading is I don't avoid risky products. I trade things like Bitcoin and Beyond Meat as long as you position size at a level you're comfortable with. The hard thing with this market is it can go crazy on you pretty quickly, but you gotta know what you're doing there. There's no doubt about it. More stocks. Netflix was upgraded and reiterated their overweight holding by Piper Jaffray, and stock is up here today. Reversal on the intraday. It found support. It held support. The upgrade is helping this, moving it back into neutral. Matt. Piper Jaffe basically sees subscriber growth through the back half of this year, and they still love Netflix, and they say it's a great company. What's your take?
So we're upgrading Netflix and we're downgrading Disney today.
That's what I heard. Yeah.
Is that what we're doing?
It makes no sense.
That's what we're doing. What analyst downgraded Disney?
Oh, that's a good
They
question.
should be fired.
One that doesn't like making money.
Well, yeah, literally. I mean, let's downgrade
Imperial
Disney.
Capital.
They should quit, file bankruptcy. Let's downgrade Disney because it's made too much money, despite the fact that it still has a PE ratio in the 15 range.
Yeah, but it's funny how these guys do it. They actually didn't necessarily downgrade it. They just reiterated their outperform.
No, they downgraded. They went from outperform to inline. That's a downgrade.
Right.
And so again, I don't understand the logic when the PE ratio is still 15. Disney's doing wonderful, making more money. That's because as they're making more money, the stock goes up. The PE ratio is still in line. But let's upgrade Netflix because it's been neutral, and let's downgrade Disney because it's been good.
Mm-hmm.
I don't understand that. But coming back to Netflix very quickly here. Looking at Netflix, obviously you got major support right here at 340, a little bit of snapback, but there's no trade here. I mean, Netflix is neutrality here. It's great for credit spreads here. But until it breaks out of 380 or 340 one way or the other, there's nothing to see here from a trading perspective, in my opinion.
Mark, what about you? Netflix coming back into the range. First of all, news like that, to me, that can be faded. I think this is an opportunity for a neutral play here. Are you taking any neutral strategies in front of this Fed meeting, or is your standard line going to be, I'm going to wait until Wednesday?
I think neutral strategies are idiotic ahead of the major events the next couple of weeks.
Mm-hmm.
I think they're irresponsible and idiotic. When you have known events coming up that can create catalyst and volatility, why do you want to be on the neutral side of the unknown event? So no.
Well, standard argument in the market would be that the market makers overprice that risk, and so you actually have the advantage because of that logic. They're seeing all these events, they're pricing it in, they're increasing the volatility, and they're saying you can fade off that volatility.
No, I'm not talking about IV. I'm just talking about catalyst volatility that can send things through support and resistance zone.
Don't you have that literally all the time? Don't you have these variables?
I think there's been one major event this year. It was Powell's pivot, and I think the next event is the Fed stance and the G20 meeting, and I think those are the biggest events of the year. I
don't disagree that those are big events, but unless the Fed shocks the market's not going to drive ridiculously crazy because of the Fed.
Mm-hmm.
I don't know.
The Bank of Japan, I mean, I'll tell you exactly what the Bank of Japan is going to do. They're going to do nothing. They're going to cite slowing growth concerns. The London Bank, they're going to do nothing. They're going to cite slowing growth concerns. The United States Central Bank is going to remove the patience language, citing slowing growth concerns. The G20, we're not going to see any major catalyst from President Xi Jinping and President Trump at the G20. I think you're going to see status quo. So, I understand that we have a lot of news this week with the G20 and 3 central banks announcing. And I do think it's wise to maybe, before you start trading aggressively one way or the other from a directional perspective, that, maybe you wait for Wednesday to see a little bit of confirmation. But I wouldn't hesitate doing covered calls. I wouldn't hesitate doing.
Well, I don't consider covered calls
money credit spreads. Well, we'll take a bull put spread or a bear call spread. I wouldn't hesitate if you have a lot of ranges and you're selling 10 deltas. So I don't think it's idiotic to go to a neutral type situation from a trading perspective.
I do.
Yeah, just prudence. Mark, is that where your head's at? I mean,
you're doing low, when you're doing things that carry a lot more risk than reward is what I'm talking about. I'm not talking about covered calls. You're doing covered calls on that. I actually like covered calls for the next couple of weeks before the G20 in particular. But as far as out of the money, low delta credit spreads, I just think there's too much risk for a big move one way or another.
Yeah. So, and I understand perspective here, obviously. Avoiding a risk versus embracing it and taking it on, Matt, that is trading 101. I mean, you have opportunities in the market. I can tell you this right now, guys. I'm stacking theta. I'm not afraid to sell an iron condor on
I'm not
Netflix
afraid
here.
either.
I would not avoid it personally, but I'm managing it day by day by day. I like low delta credits. I mean, especially on events where I just don't believe in the news. Netflix gets
Here's my
upgraded.
take on it, Tim.
Yeah.
These events are known. They're known to the entire world,
100%.
to the entire marketplace. The Powell pivot was not known. That was something that happened outside the one-day bear market on December 24th, after the plunge protection team came out, after a lot of political pressure was put on Powell coming into the very 1st of January. That's when we kind of saw that unknown event. Powell's pivot was not during a Fed announcement. It was during one of his speeches that he kind of pivoted in early January. So I don't think we should be radical around known events. They're well known to the entire marketplace.
There is a lot of known events actually on the calendar this week. We'll talk economic calendar here in just a minute, Matt. Let's keep working through the market one step at a time. AMD, I have been eyeing this pullback like crazy. It's down another 3%. Known events actually on the calendar this week. We'll talk economic. And I'm getting some audio coming through there.
That was on me.
No big deal. It's kind of weird when you hear your own voice in your head, right? That wasn't me just imagining that. That was actually
no. That was I accidentally took YouTube off mute.
Got to do a sanity check here. I might be hearing myself and selling condors on Netflix. It is what it is. AMD on a pullback here. This is a steep pullback, but this is par for the course with a stock like this. Running on the breakout, retracing very aggressively. Now we're coming into technical catalyst zones, Matt. 30 was an area we were zoning and eyeing, but now you're at the 20-day rising moving average. You've got a rising 50-day moving average. You got a trend line, and you've got an old resistance zones. Give me a read on this chart, if you would.
It obviously still bullish in my opinion. You got to pivot high. You're still above your old support and resistance areas. You're kissing off the 20-day moving average. As a trader, I wanted this $30. I wanted to get a doji. I wanted to get that upward movement in price. But again, significant whole numbers in previous areas of resistance. Those are only one of 5 different catalysts that certainly can act as a support level. And you never want to catch this falling knife. And AMD is one of the picks that we put on the stock report this week. And when you're seeing this situation, I was having a conversation with one of my students just yesterday, Tim, and his question to me was, Matt, on the reports, what type of patterns do you need to update triggers and stop losses on? I said, that is an absolutely wonderful question. When you're dealing with a stock like AMD that's retracing, forming a nice little bullish retracement, when you're dealing with that type of pattern, you don't know where this support level is actually going to form. And so as it's coming down into your support of 30, yeah, we're ready to pull the trigger there if we get that upward movement in price. But that doesn't necessarily mean 30 is going to be support. That's just what we think it might act as support. Obviously, it's coming down. And so there's no trade here, no trade here. There's no trade here. We got to wait to see where that nice little doji, that slowing momentum candle is going to form. And then we have that nice little upward movement in price where we're looking to make the trade. So on bullish retracements, on bearish retracements, those are certainly things that need to be updated from a trigger versus a stop loss perspective. But when you're dealing with, like, say, a breakout type of a stock, Tim, so if you want to write down the types of patterns that you need to update triggers and stop losses if they don't confirm, those are your flag-based patterns. Those are your bullish retracement type patterns. So flags and retracements are ones that you need to update triggers because you don't necessarily know exactly where those support levels are going to form. But when you're looking at a stock, say, and I'm just looking at the options report real quick, Tim. When you're looking at a stock like take an American Express. Here's another example. All right, so here's American Express. All right, nice. Now, what pattern is this? This is a flag-based pattern. The flag-based pattern, we're looking to buy when it breaks out and confirms above that 30-minute intraday chart. So if you look at this from a 30-minute perspective, you kind of see that coming down. Once it consolidates, double bottoms, you're looking for that breakout out of the double bottom, a really good pattern. But that doesn't mean it has to form here. It could certainly form that standardized bullish retracement where it comes down into this 20-day moving average, maybe 120. So on these types of flag-based patterns or on AMD type of bullish retracement patterns, those things need to be updated from a trigger perspective. However, when you're looking at a stock like Honeywell here, Tim, Honeywell, you don't really have to update triggers because you're just waiting on the breakout. And so on something like a breakout pattern, we're just waiting for it to break out of this level of resistance right here at 174 by 175. When it breaks out of that, and it could come down a little bit, make another run at it. It can consolidate a little bit, make another run at it. But we're not looking to update those triggers or those stop losses because we're just simply waiting for that breakout. So on bullish breakouts, on bearish breakdowns, no, I mean, your support's going to be your support and your resistance is going to be your resistance. But on retracements versus flags, if you do not get confirmation, those are stocks you certainly need to update triggers on.
Obviously, great analysis there. And I love the fact that you're talking about different patterns that are part of the step system. And Matt, it's a question we get quite often. Week by week, we've been releasing that step system module by module by module. And if you're out there and you're part of Team Tackle or a pro member, make sure you're getting through those modules every single week, because tomorrow they'll be doing module number 2 live in the coaches show. And so you need to have that done beforehand. Move on to the Dow Jones.
Not only module 3 is being released tomorrow.
Correct.
Right? And in module 3 is when we start getting into the core concepts of trading the actual retracement, using all the rules and learning that. Obviously in module 1 and module 2, we put the groundwork in to kind of understand trends, patterns, support, resistance, pivots and pivot relationships, technical catalysts, candlestick analysis. But when we start getting into module 3, guys, that's how to actually trade the retracement and the rules to trade the retracement. And Emily, on updating triggers such as AMD, you don't know where those triggers are yet on AMD. And the reason we can't update triggers yet is we don't know technically where support's going to form yet. We have not seen it slow down coming into support. So when you want to update triggers is when you get that doji slowing momentum type candle after the big drop, and then we see that upward movement in price. Once we get that slowing momentum candle, then you drop it down into a 30-minute chart. Then you identify, that overhead resistance on the intraday or the high of the day. At that point, you update. But right now on AMD, I mean, there's nothing to update because we don't know where those 30-minute intraday support resistance are going to be tomorrow or Wednesday, or most likely post Wednesday after the Fed meeting.
Yeah, I agree. Obviously, intraday, as things are going to be developing through the week, you'll be watching for those levels, those numbers, and we always use multiple time frame analysis. Move on to the Dow Jones Industrial, if you would. Oh, there's quite a few stocks actually to talk about on the Dow here. Number 1, Pfizer is acquiring ARRY, which, obviously acquisitions, whenever you see them. Chart, there's nothing here on this particular chart, but individual stocks, there's quite a bit of news. Give me a look at PFE, Matt. And just if you're new to trading and if you ever see a headline on acquisitions, usually if the acquiring company goes out and puts an offer in, the stock is going to drop. And PFE actually is holding up relatively well for making an offer on that ARRY, Matt. When you see something like that on price action, this stock jumped up. I would have expected PFE to drop a little bit on this.
Similar to the CRM.
Yeah.
Yeah. If you guys remember CRM from last week, early on last week, or it might have been late the previous week, but CRM acquired a company, paid a little premium, you saw it drop down in price, and then it kind of settled down. And that's the typical movement you do see. Pfizer, and I believe the acquisition, Tim, of ARRY, I think it was about 11 to 12 billion, I think I want to say.
Something like that. Mm-hmm.
Yeah. Big premium. I mean, obviously 30 up to 45. I mean, that's a big premium jump there. You'd expect Pfizer to come down a little bit, but obviously the market doesn't dislike it.
No. And M&A activity is usually a good sign for stock prices, stock buybacks. There's still a lot of cash out there in this market, guys. If the Fed keeps lowering interest rates, we get resolution out of the G20. We might have upside, which I'm sure we will discuss as we go through this market. Right now, flat, waiting on all this news. I understand it, but I'm looking at this market condition.
The longer we stay flatlined coming into the Fed, the more likely we see a pretty strong movement coming out of it.
It could absolutely be that. Keep moving through the Dow, Matt. Some of the better performers today, Boeing. Boeing is up. It's sitting on resistance. And take these trades obviously with your own eyes here, Matt. I see more neutral right now, but below an old support level that's very, very critical. Boeing actually announced that they were going to come out and test those planes that they had grounded earlier in the year. A lot obviously going on with the news there.
A lot of reduction in orders. A lot of reduction in orders for both Boeing and other manufacturers out there as well, such as the Airbus. So looking at Boeing right here, this is nothing to see here. I've stated it for 2.5 months now, maybe even 3 months. This is a stay away for me until I start to see a little bit more evidence, not from a technical perspective, but how Boeing's going to handle that 737 plane.
I also believe the actual trials on that are beginning.
Yeah.
Mm-hmm.
So I think that's one of the reasons that they're starting to decide, if Boeing's at risk or at
Wonderful
fault.
company, but it's no fly zone for me right now.
They're buying back outstanding shares year over year over year over year. The PE ratio is 19. The forward PE ratio is 15. They pay a 2.5% dividend. Their EPS numbers have been growing year over year. Mark, at some point this year, is Boeing an attractive longer term play?
Yeah, I mean, you just got to let it all shake out. I mean, we've talked about Boeing several times over the course of the last 3-4 months. Just got to let it shake out. You got to let it shake out. Once again, and Boeing, one thing that wasn't mentioned is Boeing is still, in the trade war, one of those companies that if you get negative news coming out of China, will take a hit.
Mm-hmm.
Just, it is right
They are
there.
a target for China.
I still think it's early here, though. I'm with you, Matt. I agree with both of you. At some point, it will be attractive, but I do believe that we are early on that because so much news that is still sensitive.
Listen, it's a company that everybody likes, everybody loves. It's a value company. It's one of those American stalwarts out there. I can't say enough positive about this company, but in the last 3.5 months, I have not liked how they've handled the entire situation with that Supermax 737 plane. And I don't think Boeing's out of the pain yet. I think we still might have
out of the pain either.
We might still see some downward movement in price. I mean, this is in a market that's up 16% year to date, and Boeing's just been cut by 25% in the last 3 months. So,
yeah.
I mean, don't bottom fish here.
I agree with that. Dow Chemical, DOW, is the worst performer on the Dow Jones. We talked about this one last week.
It was also on the report this week.
Look at how beautiful that is. Those pesky upgrade downgrades can have you gapping a little bit here, but obviously we had pivot confirmation on Friday, Matt. That was a beautiful candle selling on Friday. We're down here on a downgrade out of BMO Capital. They're just lowering their price target down to $52. We're still at 50 right now. So you've already,
So hold on. So it was at 51.
Yep.
And they lowered their price target to 52, and it gaps down to 49.
Well, they had a $58 price target. So here's the funny thing.
Let me give you a better one, 45 there.
That's right. Oh, it is in a downtrend trade. What you see, obviously weakness. Move on to the NASDAQ 100, if you would. Let's keep working through the markets here. Relative strength out of the NASDAQ today. As I look across all the different futures indexes, Matt, technology is actually the one that jumps out to me more than the others. The Russell a little bit too. We'll get to that one here. Start with the overall read on the NASDAQ. I love your line right there. Is that 76.25 or so? Yep.
76. Broad markets love significant hold numbers, no doubt about that. We actually gave technology a little bit of an upgrade coming into the week here this week from a sector perspective as well, Tim. Put it into the slightly bullish area on the scoreboard at a positive 35. So we did like technology coming into the week. We liked that it was playing defense. It's very similar to the rest of the broad market, no doubt about that from a NASDAQ perspective. But when you're looking at it from a sector perspective, you see a little bit of a different situation where you set a higher high at 78, you come back down and retrace into that old pivot point here at 76, and then you have that doji candle with an upward movement in price. And so if you're just looking at it from the NASDAQ perspective and you're looking, oh, tech's still underneath that resistance, why are you upgrading it? Well, yeah, but when you're looking at it from a sector perspective, you see a vastly different type of technical setup where you actually broke out of your pivot relationship here at 76, established a new high at 78, retraced back down into that old pivot point right there at 76. Good little upward movement in price. There's going to be some tech stocks out there that are setting up.
Some other tech stocks actually that are not only setting up, but moving here today, Matt. Lululemon, LULU, large cap company, market capitalization, $22 billion, about approaching the new high here. And we talked about Lululemon menswear, Cody. In fact, I broke my pants out this weekend just to put them on, just to enjoy them.
I'm going to go get my Lulu pants that I've never worn, and I'm going to get my Lulu hoodie, and I'm going to wear them tomorrow. And I'm going to go buy a Lulu hat. I'm going to go do that. I'm embracing the Lulu movement. I like the price action here.
You got to like it. I mean, playing defense against the market, gapped out, came back, backfilled, and now we've run 2 candles in a row, up another 3% here today, Matt, and looking very, very strong.
I know we like to make fun of Lulu sometimes, right? Get those nice little men's tights on and whatnot. This is a juggernaut, Tim.
Yes, it
You
is.
know how many times I've made fun of a company but still traded the company?
Oh, all the time.
Yeah.
That's what we do. We make fun of
Just
companies.
because I'm ragging on the company doesn't mean I'm not going to trade it, make money on it.
Yeah, I only do that on Goldman Sachs. I never ever buy Goldman Sachs.
Yeah, Dish Network is up here big today, actually, 4.1%. Not normally a mover, Matt. Not a company I trade very often.
Though.
That is a beautiful breakout.
Good breakout. When I was going through my process for writing the scouting report, I saw this little, it's a little bit of a flag, a little bit of a pennant, but you're looking at an overhead resistance right there at 38. And I about added it, Tim, to when I was doing my process. And I'm like, no, I'm not doing it. It's Dish. No, I'm not putting Dish on the list.
I hope this gets to $47 so I can short it.
Oh, I don't think it's going to get there. But it's a nice breakout on Dish.
Yeah.
That's right, Coach M. Wear Lulu
can't.
and eat Beyond Meat. That's the phrase of 2019. But as long as it's a CBD infused Beyond Meat, and as long as you're paying with it with Bitcoin, that's 2019. That's woke in 2019.
Well, I don't need to be woke. I need to make money. Take a look at some of the biggest names in the market that don't get as much fanfare as they might need to. Microsoft, Matt, I do not know why this is not in the headlines every single dang day. It's over $1 trillion. It's just not a sexy stock. But look at that thing. Dividend payer about to break out of the all-time or their high point.
Love it. Love Microsoft here. Love it above the breakout channel. Microsoft's never going to get the headlines. Apple, Google, Amazon, Facebook, Netflix. It's just not sexy. It's just not sexy in comparison to those, even though it's the #1 largest market cap company in the world that's about to break out again.
You know, I'm perfectly okay with that because I do hate when the news starts talking about Apple and all these other things and they start doing some wild movements.
Today.
I like Microsoft being out of the news so I can simply trade the technicals of a fundamentally strong company.
Because we can see a trend that looks like this instead of gapping personality because they try to make sure everybody understands what a white paper is.
Exactly.
You know what Microsoft gaps? On earnings.
On earnings.
And it's orderly as well. They gap about 3%, maybe 4%. They don't go crazy. Like the company, definitely a watch list.
Boring is awesome as a trader, guys.
Stay bored. Yeah.
I mean, stay bored.
Yeah.
Make money.
Yeah, long delta in the morning, short theta in the afternoons is the way that I've been approaching this market. Amazon, Matt, next. And just orderly, discipline, step by step. I got to tell you, 1900, I've been eyeing this thing. I don't want to talk myself into a trade here. I have no position, Matt. Breakout at 1900.
I will tell you what every coach said at Tackle Trading. No.
They said no.
Yeah, they did. They asked it. They said no. I mean, a break about 1900, I mean, you got to target at 1950. There's better trades out there.
It was one of the fastest no trades. I think that 3 coaches very quickly were like, no, veto, no.
So I get it. I see your trigger. You've been looking at it for a week here, but I just think there's better trades. I mean, take that Microsoft breakout versus, the breakout of 1900. Which one would you rather do?
I think Amazon quickly runs to 2000 and bypasses that 1960. If
That's
you have
a lot of
bias.
hope and want and wishing.
I'm just saying, I trade the stock every day. I don't want to get biased. Mark, talk me out of my bias
There's
here.
not an analysis that says that, though. It's just going to run from 1700 to 2000 because you want to make money.
Fed cuts rates or gives strong signal. I could see this hitting 2000 quickly.
I'll keep watching it.
But you got to have that catalyst. You got to have.
But doesn't Microsoft go up 5% in that situation
You
too?
didn't ask me about Microsoft. You asked me about Amazon.
Yeah.
Correct.
I just don't know why you're so enthralled with shorting Netflix and buying Amazon.
Because I want to.
I mean, we got a weird pair straight going on right now.
Netflix has had negative sentiment all year long. I think Amazon has underperformed, and if you get positive resolution out of some of the storylines out of that,
and one would say that there's maybe a reason
it's underperformed for a reason.
Yeah.
Micron's underperformed too.
There's a reason why I haven't pulled the trigger yet. I'm still watching it.
US Steel's been underperforming for me for years.
Yeah.
You don't see me complaining.
Underperformance is not a sign that it's going to catch up.
Hey, listen, U.S. steel was $36 a year ago. Let's buy it at 14. That's the logic. No, come on.
I
Plus,
got you.
Amazon is always, as long as Trump is president, Amazon is always a potential for huge news event to the downside because Trump comes in and uses his powers to target his enemy.
He already did it. He already started railing on the Washington Post the other day.
You know, mandatory look at Beyond Meat here today as we keep moving through technology companies, Matt. Now they are one of the top.
I do not want this mandatory, by the way.
It has become that way, Matt. We're up
Everybody's talking about it.
12%.
Yeah.
Everybody loves talking about Beyond Meat.
Fun. I think the better trade's the lift breakout.
Yeah, I think the better trade is short and Beyond Meat in about 6 weeks when you get a nice, clear,
double top, double bottom break of support reversal.
You get a nice. There is a Beyond Meat short coming up in 6 weeks, 10 weeks, 12 weeks.
It might be 6 months, Mark. Who knows?
But it is an insane short. Oh my goodness! They make money short. You just got to wait for the pattern to develop.
Mm-hmm.
Yeah. It's the Tilray short coming at us in 3 months from now.
It is a huge money making short. It's just 6 weeks, 12 weeks, 6 months. I don't know.
I'll tell you when it's not. After it gets downgraded, gets beat up by 25%, then just snaps back 3 days later like it never happened.
Then the computers take over, and all those moving averages are underneath it, and all the.
I want to be clear. You don't short euphoria. You wait till euphoria ends.
You wait till that thing peters out, because this thing could go to 300.
It wouldn't shock me at all.
I don't know the price level in which the short opportunity is going to develop. I just am confident that it will develop.
Mm-hmm. Yeah, well, veteran, it reminds me actually, Matt, of the conversation we had with Pete Thomas on the podcast a year and a half ago about Bitcoin. And we asked Pete, what's your opinion on Bitcoin? He says, everybody I know is short. And that was after it had topped out at 19,000 and started to come back down a little bit. Beyond me, most veteran traders are not going to be long here. I can't imagine.
No, most veteran traders are laughing at, the millennials buying this on Robinhood.
They are buying it. Geez.
Oh yeah, it's amazing.
Oh, it has everything. It has everything that young, inexperienced traders love.
Same thing with Tilray.
Price movement, like a sexy concept. And it's not that Beyond Meat can't be a good company. I don't have the same negative things to say about the company, the Tesla, that I did about Tesla over the last years. It's just this doesn't end well in the short term at some point. At some point. That doesn't mean it can't go to 300,
Let me ask Halftime Crew, guys, are you avoiding? Are you trading? Or you've got it on your watch list? Are you watching the insanity? What are you doing with Beyond Meat? Buy, sell, hold, pass, anything that you're doing. I'd like to hear.
I'm a pass.
I'm sure I'm a pass right now too.
I will tell you, I will be a short at some point, but it's you don't short euphoria. You don't short craziness. You wait for it to end, the same thing you waited for 2017 to end with Bitcoin, the same way you waited for Tilray to end, and then you take a short position when you get your technical signal. So for me, it's a pass for me.
I bought this.
Never end well.
They never end. Going to go from 40 to 160, and then
go put up Tilray's chart. It's the same thing. Tilray had this mammoth run up. Didn't end well for Tilray.
And by the way, I'm with Mark. I actually like Mark Stein. I actually enjoyed Beyond Meat products. My wife made me go to what is it, Del Taco, just to get a Beyond Meat taco. I'm not saying the company's bad. I'm saying the valuation is so far out of whack. It's crazy.
Mm-hmm. It's just going to set up for a nice short. It just might be at 300. It might be a freaking $400 for all we know. You cannot guess when euphoria ends.
No.
Here's what I love about Halftime Crew. Maria, one of our trading assassins out there in Chicago, Matt, cold-hearted. She says, "I don't care."
Yeah, but she doesn't care about much. She's a killer.
Oh, Maria, you're a killer.
You could ask her a lot of questions on stocks. She's like, I don't care.
Tesla is next. I do want to talk about this one. Let's see if you guys care about this. Elon Musk is deleting his Twitter, Matt.
Yeah. Okay. First of all, you don't say you delete your Twitter on Twitter.
You just delete it?
He did. He called himself daddy.com.
And then it's not deleted.
Did you guys see that? He literally changed his name to daddy.com.
Listen.
Oh, I got to tell you, that was fun. I had to laugh at that one.
Elon Musk is all flash, no substance. And this is marketing. He's not deleting his Twitter account. Yeah, I'll believe he deletes his
delete it
Twitter.
for 12 hours.
Listen, if he actually deletes his Twitter account, I'll buy 6 shares of Tesla. How about that?
I will tell you though, look at the market's response on the news that he did delete his Twitter.
They did like it.
How long have we said that he needs to get off Twitter? If this is about growing Tesla, he got to get off Twitter and stop partying with the fanboys.
Listen, I'll be shorting Tesla at 254. So
254 is your number.
I
That
shorted
must be
Tesla at 220, and it didn't work out today.
Is that a monthly EMA mark that I'm thinking?
It's a weekly 20.
The weekly 20 that you look at, a little bit patience there. I actually kind of like anything in here around this 230 mark, Matt. There's an old pivot point right there. You've got the falling 50 period moving average. I mean, if I see price action, yeah.
I mean, obviously you wait, and I wouldn't hesitate to re-trigger here, but yeah, I still think it's a good short in the future. Tesla's not going to just turn their bad revenues around just because Elon deletes his Twitter.
Yeah, no, I agree with that. Obviously a company that people are going to be watching day by day.
You should stop watching TV.
No, the only thing that can give Tesla a long-term bump is more government cash subsidies.
Well, let's not say that can't happen.
That can, and that would be a major bump. And if you got that, then all bets off. Tesla can rocket higher, but without that, they got so many debt problems. They got so many debt problems.
Yeah, I think there's obviously one of the highest short interests for any company this size for a reason. You've got a lot of people betting for the fanboys, but you've got a huge portion of the market betting against this company, Matt, continuing to show volatility, and it will do that. Give me RTY, if you will, real quick. Give me a quick peek at this one, the Russell 2000, and we have backfilled here, 1540. You're below the 200. Any new update on this one, Matt, what you're seeing?
No.
Not really.
I mean, you got like the price action. It's relatively strong compared to the rest of the market, but its trend's still relatively weak. Again, the Russell complete catch up. Let's wait to see what the Fed's going to do on Wednesday. $DXY US dollar index. As I look at the currency markets, there's a lot more than just the Fed. Mario Draghi came out. He had testimony today that he was talking about, and I don't know what he said in this.
One last thing on the RUT for individual. This is my advice for individuals looking to place their August RUT condors, because you'll be talking about that. You might want to wait. Let's say we get a real bullish reaction out of the Fed that lasts 3, 5, 6 days. Wait to place that bear call on some slowing momentum signal after that euphoria is over, so that you can get the best price or the little bit further out strike price.
There's a lot of ways to approach that condor, obviously. Tonight, we're going to be having the mastermind group. August is 59 days out. Some people might already be into that condor last week, obviously, depending on how much credit you're getting and how much distance, Matt. I know if you're a veteran of that system, you might just stick all 4 of them in there. But I love what Mark's saying here is that to use the price action to leg in side by side. If you've got those skill sets and you're watching the market day by day, I do think that's an added skill set that can help you build profit.
Yeah, I mean, there's 59 days to go in the one contract that we'd be looking to play here. I don't think that's bad advice to wait till Wednesday to after you see the Fed to see, where that resistance level is going to play. I mean, the market could very easily go down on the Fed on Wednesday. It doesn't have to go up.
Yeah, the device plays both ways.
Yeah, I mean, it works both ways.
Wait for that to just die out a little bit because you could see strong movement.
Yeah, you could see strong movement. The Russell does move a little faster than the other indexes for certain, both on the upside and on the downside. And it's, again, when you have a major situation like the Fed on Wednesday, and you're looking at a 59-day contract. Yeah, wait a few days, put a 56-day contract on.
And I just want to point out still, go back. Okay, we had an interview with David Keller on the Trading Justice podcast a couple weeks ago.
Yeah,
if you haven't went and listened to that, go listen to it. It's a fabulous. And every time I look at semiconductors, what's our semiconductor index? SW, what is it?
There's a lot of different. Here's the
SMH.
Yeah, those are the holders, right?
Yeah,
same as the stocks.
Same thing.
But every time I look at that small cap, and every time I look at semiconductors, I'm like, how healthy can this market really be when you see small caps and semiconductors doing what they're doing?
Mark, and again, not to just sit here and promote David Keller's interview, but it was a fascinating interview, and I thoroughly enjoyed it. But I also learned from it, Mark, what he said when he's talking about, the market not being able to recover that bullish mentality when semiconductors are underperforming the broad market, when the Russell 2000 is underperforming the broad market, and when staples are outpacing discretionary. That was some of the best advice I've heard.
Yeah, you know what?
Analyst in the last year, Mark.
ETFs hit an all-time high today. REITs, XLRE. That's not the sign of the best. I don't think that's a great market condition.
When like utilities, REITs, and staples are the best performing sectors.
Like when small cap semiconductors relatively stink, and all of your defensive sectors are at the top. That's not a market that's overly euphoric.
No.
That's a market that's positioning their money for defense.
You're talking about the three safest sectors in the market. What would you put number one? Utilities?
As long as interest rates aren't climbing.
Okay.
Utilities. So I love utilities. I love REITs. And then
the REITs, right? Yeah. Then XLRE, and then consumer staples. Mm-hmm. There's not a fourth close one, guys.
No. Those are your three defense.
Healthcare and finance performs more like aggressive sectors over the last 10 years. They don't perform.
Healthcare's like David Pumpkins is his own thing. It's its own thing.
Now I might be confused.
Pumpkins reference.
Who's David Pumpkins?
It is a Saturday Night Live skit, and literally there are two types of people. There are people that love the David Pumpkins skit, and there are people that hate it, and there is no in between. Tom Hanks plays this character called David S. Pumpkins, I believe. Go look on it on YouTube, and you'll find which of the two type of people you are. You love it or you hate it, because there is nobody in between. So there's no
more cowbell.
David, Tom Hanks, David S. Pumpkins. Go check it out on YouTube.
I will check that out as we're waiting for the Fed. You might be able to watch a few YouTube videos. And by the way, if you're watching us on YouTube and while you're looking up the David Pumpkins skit, before you do so, give us a quick thumbs up and like and subscribe to our channel. Help us get the word out there. If you join us every day for the halftime report, that's really helpful for you to click that thumbs up real quick and get our SEO up there and have other people come out and join us. $DXY Matt, until we get to the Fed meeting here, we're literally in the middle of two pivot points, expanding volatility, but it's all news based here on Wednesday, don't you think?
I do. We did upgrade the dollar coming into the week because of what happened on the retail sales numbers, even though I think that was a complete overreaction to the retail sales numbers. We did upgrade it coming into the 40 arc. So it's not bullish, not bearish, just kind of on that slightly bullish, but to me it's neutral until Fed.
Yeah. I'm feeling that myself. By the way, it's not just the Fed this week that has events. Carney speaking, Draghi speaking. You've got statements out of the Bank of England, the Bank of Japan.
Yeah, but we don't need to listen to Mario Draghi. We know what he says.
He says the European.
He's Janet Yellen. He's Janet Yellen. That's who he is. If you know Janet Yellen, you know Draghi.
Heavy week of economic data, though. I do expect, obviously, after that Fed, we're going to get some volatility post-Fed meeting. There's no question in my mind. Move on to crude oil, if you would. Mark, give us a quick rundown. I know you've done the commodity report over the weekend. Crude oil here doging today, coming into $52 per barrel. What's your read on crude oil right now?
It's a tough read right now. The technicals are ugly. But you've had relative stability over the last 8-9 trading sessions. So lots of ups and downs in that 8-9, but kind of where we were at 8-9. All of the huge movement is to the downside right now, potential. Mm-hmm. Like that's what the technicals are saying. You have a clear air situation developing. Crude oil closed below its 200 weekly last week. Any spark, any negative catalyst, you're going to see downward pressure. I mean, all of the technicals, like across the board. I don't care if you use moving averages. I don't care if you use hard resistance levels. I don't care if you use trend lines. They are all bearish, To get through anything like that as a bull right now, you're going to have a major catalyst. So absent that, production, it's been everything like production. The EIA weekly report has been bearish for 3 or 4 weeks in a row now. It's just all ugly. So you're going to need more than one little thing to turn around oil right now. And if you get anything negative, you could see some another leg downward right now. So.
Yeah, it's interesting on the 30-minute chart here, Tim, where you have this very consistent bearish trend line, and that's how you draw a trend line, ladies and gentlemen. You drop it down into the 30-minute chart, you connect as many resistance levels as you can to make the most logical trend line here. And as I've connected these resistance pivots to the downside, you see a very consistent 45-degree angle downward, which is a very consistent trend line on the downside. You have a couple intraday support levels to really kind of focus on. One from a day trader's perspective is right here at 51.75. A break of 51.75 should see $51 in the short term, and then you have the swing traders break of 51, where you have this very strong level of support right there horizontal at 51. So keep an eye on those levels when you're looking at crude over the course of the next couple
those breaks, you don't got anything holding it up. You know, so not only do you have all of the resistance levels bearish, but boy, you break those intraday support levels that Matt talked about, you really are in a perilous situation to the downside for any oil bull. So technical's ugly.
What's the risk with the Iran situation with the oil markets, Mark? What's your take on that? They talk about.
Here's the thing: geopolitical events historically. Like if you followed oil as long as I have, and even if you haven't followed oil as long as I have, anytime you have a geopolitical event where there's potential for war, there's potential for conflict, this usually spikes oil. It's usually a very bullish catalyst. But that is the thing that, for the first time, I really started getting scared about some of my longer term oil bullish positions. You saw that spike. I believe it was on Thursday.
Yeah.
But you've immediately had to sell. There'd been no follow through. Zero follow through. That trend line Matt drew, it held. Moving average. Like I said, it doesn't matter what technical you use. They're all bearish. And so it all held. And so you got that little spike on the event, but no follow through at all.
That's because the market doesn't believe there's going to be a war with Iran.
Yeah, I mean, if there actually was a conflict, then you know that would be the catalyst that would shift this oil's direction. But
again, I think this is something I've seen recently, guys, where Trump used to have a much bigger market move in him. When he would tweet something or say something or do something, it would have a very big market move. And now it's kind of like we've seen it too much, right? Okay, so yeah, you guys,
because everybody knows
a
he's
nice
full of
video
crap.
saying that Iran did it, but there's no evidence to actually suggest that.
Listen, I'm voting for Trump in 2020, most likely, like 98%.
Yeah.
I'm voting for Trump, but everybody knows he's full of crap on a lot of the things he says, and so
even his base knows that.
Yeah, you know, and I guess I'm part of his base, kind of, maybe.
Oh, you are absolutely part of his base.
But I'm voting for him, but we know he's full of crap.
But you know that.
And so with our money, like trading, you know that, listen, you take it with a grain of salt, that it's most likely marketing or him attempting, or he's having a bad day or whatever.
They're trying to diffuse something else or something, but
MAGA
there's
2020.
no to it.
MAGA 2020. That's where I'm at right now. So
gold next, GC contract. Mark, I know that you've been bullish on gold. Obviously, the market has as well in the short term. It's been running, but we are now hesitating and failing. That candle on Friday is a concern to me. Not a lot of selling, obviously, as we're
candle. First of all, the candle. Okay, it's at resistance. Buying at resistance is just is problematic, anyways. The candle on Friday is the dollar reversal. You know, the dollar started going crazy on Friday, and gold reversed course. Gold's not going to do anything till Wednesday of any significance.
Mark, is any trader going to wait till it breaks out of 13.62 and 20 cents before they pull the trigger above 13.50?
I don't know what any trader would do. I'm playing a little bit. What I've been doing is my existing gold holdings, I've been selling covered calls pretty much close to at the money. And then I've been trying to sell puts to buy additional gold at lower. I'm not buying it at 13.50 and I'm not buying it at 13.60. I'm waiting for some prolonged, easily identifiable trend. It's a tough area because Tim made the argument last week that resistance was at 1,400. So you're going to have traders.
Yeah, which means I'm buying it above 13.50 because that'd be a great trade. My point is this. I don't care about that tick.
I don't either. I don't
at
either.
all. That tick was literally the overreaction to the retail sales numbers on Friday morning. If you get a close above 1350, you got to call that a breakout for me.
Yeah. Yeah, I think you've got a trading breakout
No,
right
Tim,
there.
you're not allowed to say it's a
close above
breakout unless it's
1350.
1400.
We're talking about the yearly, annual, long-term breakout. Investor is different than what you're looking at on a daily candlestick. We're not getting into this.
You do the same thing
We're
Mark
off last
does.
week. Moving on, Bitcoin, real quick. Look at that chart again, Matt. And it is a breakout. By the way, those weekend breakouts is because Bitcoin's trading. You know.
Oh, Tim loves.
9200 held right there, buddy.
I like my trade here. Obviously,
I
that's
like
why
your
I'm
trade better than I did at the start of the show.
I like your side. I get it. People love trading.
Listen, all the momentum's on big. The only thing it's not like if you were to guess, where is Bitcoin going to be, up or down 3 months from now? All of us would say up, right?
Yeah, that's the most likely scenario, but it also could be back down to 4,000.
Would you say up, Matt, 3 months from now?
I'd have to think about it, but I'm not. I've been around Bitcoin since 13. This thing can fly one way or the other with a fart in the wind.
Yeah.
I mean, because I would say 8,900 is a relatively tight stop for Bitcoin for its range. Where's your targeting?
I've got 10,000. 10,000 my target. Yep.
I don't mind
it's a sensible trade. You got risk reward about 2 to 1. I mean,
if
it's
it goes
certainly
under 9,000, it's going down to 8,500. I mean,
now, do you have an automated order in at 10,000?
I do.
Put that automated order at $9,990
and 99 cents.
Get that underneath 10,000. In case people get a little hesitant. I mean, it's a classic trade. It's a classic momentum trade. You got nice reward risk. I don't have anything bad to say about the trade.
I don't mind the trade. Gap up, stalled, played defense at 92, put a stop loss underneath the gap range. I mean, that's a momentum gap play on an earnings report.
Cryptos are not for everybody, obviously. It's reward to risk and position size, just like what we talk about in the STEP system, Matt. And real quick, every Monday, we always do this. Give us a quick flash fire through all the sectors and kind of update the team, if you would.
Yeah, I'm just going to quickly go through these, everybody. Make sure you're watching the video in the Tackle newsletter over the weekend that Cody did. Wonderful video, wonderful write-up there. I'm going to go through basic materials here. Basic materials, we upgraded to the positive 40 mark. We did that because we were sitting in a high base type situation. We didn't know if we were going to get the breakout or the retracement. Obviously, we're starting to see the retracement. And if we do get a retracement down into, say, somewhere around this 56 mark, which just so happens to coincide with some major levels of old resistance, that would be a wonderful opportunity on the buy side as that retracement does take hold in basic materials. The next one, communication, obviously got a little bit of an upgrade today given the Facebook news that came out over the weekend. Facebook's one of the biggest stocks in this ETF in the communication sector. We actually downgraded it to the negative 35 before that. Now, obviously, with that gap out, it does change the parameters. So once you're seeing in the report, we have a negative 35. That would more likely be into the positive 50 zone with a little bit of neutrality with this breakout of the communication sector. Energy here, we had at a negative 30 on the energy. We kept it as a negative 30. Good bearish downtrend, sitting right here on an old support resistance area right there at 62. As long as this stays under 62, that is some degree of bearish. Looking at the next sector here, industrials. Industrials, we kept at the 50-yard marker as well. Seeing a lot of reversal tendency in this chart that we talked about in late last week in the halftime report. Left shoulder head, right shoulder. Very concerned about the industrial space right now. That's why we kept it at the 50-yard marker. A lot of neutrality, but it does have reversal tendencies. Technology, we already talked about, Tim. Love that little snapback retracement coming back down into 76. Very similar to what I talked about on basic materials. When you get a little overextended, you break out of that zone. Watch that retrace coming back into it. Technology did that. We upgraded technology into the positive 35 because of that. Consumer discretionary also got a positive upgrade to the positive 35. Little bit of a flag page pattern, pendant based pattern. Broke out of 118, seeing price appreciation up on top of that. This is very overextended in the short term, in my opinion, but you cannot, your eyes tell the truth, guys, and that is a breakout out of 118 on Thursday of last week. Continuation coming into 119. Overhead resistance probably starts at 120 by 121. Looking at your defensive sectors, and by the way, in my opinion, there's only 3 of them, but technically there are 5. Let's start with financial. Financial, we upgraded into the positive 40 territory, very similar to what you're seeing on technology. I like what I'm seeing on financial right here. You broke out of this old level of resistance. You snap back, retrace into that 27. You played defense right here at 27. I like that. What I saw, a lot of this in the financial space was not your banks, was not your broker. A lot of credit card companies like Visa, American Express, those types of companies, MasterCard, all of them forming bullish continuation patterns, all of them in bullish good trends. Also insurance companies, a lot of insurance companies were setting up on the bull side as well. So keep an eye on that space within the financial sector. Once again, that would be the insurance companies as well as your credit card companies really kind of holding and showing the strength in the financial space. But from a sector perspective, I like what I'm seeing when it breaks out of the old resistance, snap back retrace coming in to test that, plays a little defense there. I'd like that about the financial space. Looking at the next one here, XLP, consumer staples. This is one of your best performing sectors of the market. You're overextended to the top side. You're starting to form that high base. You certainly could form that retracement. So in my opinion, in this space, let's let that form that high base and then wait for the breakout of 59.27, or let's let it retrace back down into 58. You have that old resistance right here at 58. You have a rising moving average that should catch up to that as well. So patience is the play in hand right now with the consumer staples sector, a little overextended in the short term. We talked about the REITs and the utilities. Look at REITs. They're just doing absolutely amazing. It is our highest rated sector for a reason. By the way, consumer staples upgraded to the positive 25. Real estate right there at the positive 20 level on the scoreboard, broke out and run after the high base right there, and it's continuing to run. REITs full of dividend paying, very safe haven type scenarios. Utilities, next sector on the list, and we're looking at perhaps a breakout of 61. We did upgrade the utility sector into the positive 25. Good bullish uptrend, retracement back down into the breakout channel, and now you're making the run at breaking out of 61. Very positive on from a utility perspective. And then last but certainly not least, healthcare. Healthcare got an upgrade into the positive 35. Why did it get an upgrade? Because we love the consolidation we're seeing here. Bullish uptrend, consolidation, very tight between 91 and 92. Look for a breakout if you're looking for a buy signal. And that's sectors for this week.
That's right. And Mark, I believe we've got a full week of events here at Tackle Trading. Just make sure I don't miss anything. Monday night, tonight, we do onboarding for brand new students who are just learning how to use the website and whatnot. But we also have our Cash Flow Condors Mastermind group, correct?
Today is the day of condors. On the Trading Justice podcast, we're going to talk about a variety of things. Maybe even a clown of the week segment. And we're going to talk about condors. We got cash flow condors tonight. We're going to talk about condors on the Cash Flow Club on Thursday. Going to go over the STEP system, module 2 on the coaches show.
Hey guys, I'm still looking for my for a nominee for clown of the week. So if you have a nominee for clown of the week on the Trading Justice podcast, let me know on Twitter.
I already know who mine is.
I think I know who mine is.
You can't take my nominee.
No, I did it first.
You did not do it first.
Check Twitter. Check Twitter.
I know that you mentioned that he was on Twitter first, but you didn't nominate him.
Hey, Matt, you could always just use Kramer with Lyft.
I could use Kramer with Lyft, but you know, Kramer's been emotional on Twitter lately. I think he's been beat up a little bit by the Lyft, and so I just want to subtly.
We'll be nice to him.
Yeah, let's be nice to Kramer. Tackle, let's be nice to Kramer. You know, he was a little early on the breakout on Lyft. Let's be nice to him though.
You know, if you're watching our show right now and you are not yet a pro member, we always, in every halftime report that we do, we put a 15-day promo code in the comments below. And if you're watching the replay later, put something in the comments. Let us know what you like about the show and so on and so forth. Matt, I did like the day in history that Cody put in here. Have you been to the Statue of Liberty, by the way?
I have not been. Obviously, I've been downtown Manhattan and saw the pier and the wharf and all that. And I've been on the side of Jersey where I was golfing at some very nice country club. I can't remember what it's called though.
Yeah.
Bayonne. I was golfing at Bayonne. You could see it there. That was beautiful. But I've actually never been on the actual island.
I took my girls over there a couple years ago. I was there on, Labor Day 2017, and we took a little trip over there. We also did the 9/11 museum. We went down to One World Trade Center, so on and so forth. You know, when you've got your kids on vacation, you tend to do a little bit more touristy stuff, and so we did the Statue of Liberty.
Those things are pretty cool in New York City, though.
I think it's
that
pretty
touristy stuff. I mean, when you're going down to, the Trade Center and you're going down that memory lane and the tributes, and you're looking at the Statue of Liberty, and and I get it. Times Square is Times Square, but I still like it.
And if you don't know what I'm talking about, on this day in 1885, the Statue of Liberty was dismantled in France and shipped to America.
Thank you, France.
Gift to America. We do appreciate it. What a
only
cool.
The second best gift France has given to us, the Louisiana Purchase being one.
Yeah, that was definitely the first.
Yeah.
Thank you, France.
Yeah. All right, guys. Very good show here today. Cody, good job. Matt, good job. Mark, good job. We will see you guys tomorrow in our halftime report here at Tackle Trading.
Tackle.
Yep. See ya.